YouTubers, we're only like 2.5 weeks away from the Canadian elections. The NDP housing plan is the latest bad, but still making housing more expensive. Guys, we got elections in the air here in Canada. You could feel the bull crap, you could smell it, you could feel it, you could taste it. What are they going to spew for us this time? What are they going to promise us this time? What are they going to change for us this time that's going to be in our favor instead going against the status quo or against the current like it usually does? So what is the latest bad by Better Dwelling? Let's check it out. Only 7 days until the election, and all parties are promising helicopter money for housing. Yeah, that's great. The NDP plan with residential subsidies is probably the most well-intended one. Rather than using tax dollars to help buy investments, they're focusing on core needs. Unfortunately, every time you inject a large number of cash into the market, it creates a ripple effect. The ripple effect flows through the whole market, not just a targeted segment, even if they're only looking to help low-income renters. There's broad implications for both non-subsidized renters and homebuyers. Yeah, there is. As mentioned in all the pieces covering the Liberals and CPC, we're not picking on a party. Instead, we're taking a nonpartisan look at just the housing plan. We're also exclusively looking at the risks and unintended impacts to the broad market. Politicians are more than willing to discuss the positives, so we'll leave it to them. The last part in bold, because that despite writing this yesterday, a number of CPC supporters still contacted us to say it was biased to cover only the positives once again. Just the risk and unintended consequences. If you pull up a pizza menu, you really shouldn't be comparing if you can't find sushi on that note. So let's take a look at the NDP's rental subsidies. Immediate relief from rents? What? The most interesting key point, the NDP platform, is rent relief via supplements. The full details of the plan have yet to be released, but so far they've said it would amount to $5,000 for 500,000 families. $5,000 for 500,000 families. An extra $416 per month is quite the windfall. If you're living on a tight budget, in theory, this income frees up more household cash to spend on necessities. This is kind of good in a way where people could trickle the money into the economy and kind of build up the economy, and small mom and pops businesses might get a little piece of that cake. But I think it's just going to go towards credit card bills and all that other stuff that people racked up and built the economy on in the first place, on credit cards. The problem, first off, you're going to give taxpayer money to someone. It should go to those with low incomes. Money to low-income households help them live with dignity and is immediately consumed. The money isn't a handout to build excess wealth to private households. It's spent on basic living expenses and quickly flows back into the economy. In this case, the rent supplement would go right to the landlord. That's where the problem is. It's a much rental relief, as it is a gift to private landlords. Yeah, then they could just raise that delta or that aggregation that the renter is getting, the low income renter. They could raise that aggregation, saying, "Oh, your rent's going up," so then that aggregation just covers, and they continue paying the same rent from before, and the landlords get a nice gift. Renters of private property receiving supplements tend to see rents rise faster. Okay, yeah, I just said that. Even though households were uncomfortable before supplements, they still made up the payments. Injecting additional cash means they will more readily absorb increasing to rents. In France, with subsidies rolled out, landlords adjusted their pricing strategy for potentially assisted tenants. Basically, the same units were now much more expensive. Landlords knew the government would make larger increases more palatable to those households. Oh, you see, so it's just a gift to the landlord is all it is. This makes the landowner even more prosperous in this case, right? So that's, woo! The plan drives rents higher across the board. Knowing how the market prices rent is important. When it comes to understanding the impact, rents are priced according to comps. Remember this, guys. This is very important. Not the cost the landlord pays to maintain the unit. For each additional perceived benefit unit has, the more expensive it becomes. It's fair to assume that needing rental supplements would seek at least the least expensive housing. If the least expensive housing gets a bump to absorb the cash injection, everything else gets a bump as well. In the short term, this could push all rents higher. Wealthy renters don't worry about it. The higher the rental price, the smaller the impact of the rising market price floor. That's important too, guys. Higher rents support higher real estate prices. Yeah, this is the part right here. This is the problem. It's going to create that effect that a lot of realtors are hoping for to get back into the market so they can stop serving coffee at through the drive-thru at Tim Hortons and get back to selling properties, right? If private subsidies rise rents, they improve the rate of return on the housing. As the rate of return for housing rises, so does the premium for investors. That's the white-collared way of saying home prices move higher. If home prices are falling, this cushions them from falling as much as they should. If home prices are rising, they should accelerate them even faster. Higher rents can also create more buyers, since the gap between rent and buying narrows. That's very dangerous territory we're entering here. Creating more demand typically generates more upward pressure on the prices. In hot markets, some investors accept negative cash flow for fast appreciating houses. These speculative landlords are actually paying to have tenants in the units. It's a risky way of doing this, but it works if prices keep rising faster than the gap between the rent collected. That's another dangerous business proposition. Could be very lucrative, but I wouldn't do that. Obviously, this is a suitable long term. If it were a one-bedroom condo that costs $500,000, would be worth $100 million in just say 61 years, there's a typical pullback towards more sustainable return based on rent collected. In a bad recession, where rents fall as well, they both chase each other lower. However, as rents rise, they make falling prices more attractive to investors, right? It creates that gap and people feel that it's a time to jump in, right? Of course, investors will take their better yield. Shift to suburban markets. Rent subsidies can prevent prices from falling. So what? Long-term runaway prices threaten the economic viability of cities, driving investments away. Employers are already paying premium rents, also have to boost wages, keeping talented staff at the brink, and poverty doesn't typically end well. Being an urban employer becomes much more difficult. You guys remember what happened in Dublin, Ireland, where Dublin, Ireland had the big companies there and tech companies, and not only that, like important companies that require skilled trades and stuff had to kind of relocate outside of Dublin because they just couldn't afford to operate out of Dublin. They couldn't afford to hire their staff because their staff just out of school couldn't afford to pay first and last month and damage deposit in Dublin. So people have to commute 40, 50 minutes to get into Dublin, Ireland, and they're just taking a part-time or a minimum wage job in the little local town they live in because they can't afford to commute to Dublin every day. And then a lot of employers are facing to relocate outside into middle southwest Ireland, so southeast of Ireland. So I don't know. Once the cost reaches a certain point, employers start looking to setting up shop at other places, and that's been happening a lot. A lot of shops left Vancouver and moved into places like Merritt, Kelowna, and Kamloops, guys. So Manhattan has been seeing this for some time, with many firms moving across the water to Silicon Valley with lower price-to-income ratio than Toronto is seeing an outflow of new companies due to prices. The reason? The majority of investment in startups now goes to rent. That's very dangerous right there. In these expensive cities, ultimately, this leads to price stagnation, driving employers and property investors to smaller cities. This is a part of the reason Canadian real estate investors have been flocking to the suburbs. I myself left the city of Vancouver. Watch my series, Living the Dream series. I left Vancouver and moved here because I am not paying $2 million for a 2,000 square foot bungalow, 2-bedroom, 2-bath. I'm sorry, I'm not going to do that. Nope, bungalow built in 1910. Not going to fly, sorry. The NDP housing plan is the most notable of plans, actually looking to help poor people. However, they're estimating over 1.3% of the population needs an injection of cash. You can't inject that much money into the private system without causing a ripple effect. Further, this is a temporary measure until the government builds more subsidized housing. So what happens to the rental supply previous occupied subsidized renters in 10 years? And investors holding those units won't be super happy. Well, here's the deal. Remember this? I just read this in a video before. Canada has 1.34 million empty temporary and 1.34 empty homes, right? 1.34 million empty homes. Well, it started because of this. Yeah. Canada's increasing visas from China to 500,000 per year, opening more visa offices can help Canada compete for more Chinese workers and students. So this is a big problem. This leads all back to this. Canada wants more Chinese. And so it leads to that, and this is the problem we're facing now, right? Everything's overpriced. Everyone's bought out of the market, and no one can compete with a lot of laundered money. $200 billion laundered through Canada in real estate. So how do you fix this? You can't. There needs to be a reset. There needs to be investigations into the money laundering scheme. People need to go to jail. Banks need to be held accountable for fraud. Look what the Royal Commission found in Australia when they started digging through their books of their big banks. Anyways, guys, this is it. This is very important, guys. You need to share this video and get this out there. Yeah, it's kind of boring, but it's very important because there's no fix. They tried interest-only mortgages. They've tried first-time buyer's loan. They've tried no payments for a year, free avocado toast for 2 years, free wine for a year, free tacos for a year. They've tried everything to move some of these properties, but because the Canadian proper isn't making nowhere near enough to sustain these kind of payments and everything's going towards rent. That's why majority of the Canadian proper right now is house broke. The majority of the Australian proper is house broke. The majority of the UK proper is house broke. And Western United States, from Seattle all the way down to San Diego, is house broke. Let me know what you guys think in the comments below. Share this video, get it out there, and let's get our trumpets blasting and get people on board to understand what is happening with this housing crisis, especially if you're in the Commonwealth. Thanks for watching.